All right. So tip number 3 is to ensure you have a good entry point for your investment.
You want to break that down?
All right. So I would if I could, but I can't. Welcome to another episode of Stocklist. Today, we'll be taking you through a few tips to ensure that you don't fail when investing in the stock market. Michael, quick disclaimer.
Yep, so we're not financial analysts. Neither are we financial advisors. To everything we say with a pinch of salt, Maggi,
Even paprika.
that's it.
Sprinkle it, fam.
Everything we say is for entertainment purposes only.
There you go, you heard it. I'll give you my number 1 tip to ensure that you don't fail when investing.
Let them know.
You should always invest in companies that you believe in so that you can sleep well at night. Let me break it down. If I don't believe in your business, I ain't investing. No, I'm playing. So I tend to invest in companies that I know and I understand how they make money, and I believe that company, like I have a personal belief that company is going to do well in the future.
Not just the company, the industry.
Yeah, the industry is very important. If it's a growing industry, maybe something new, and it's growing, and I know that there's potential growth in that industry, I'm going to look into it and I'm going to invest.
Tip number 2 is reallocation of profits. So I'll break that down.
What does that mean?
So don't be afraid to take profits. By saying that, I'm not saying close all your positions, but if you've got enough positions in a certain company, take some profits off the table and reallocate it to other firms within your portfolio.
Okay, so an example of that would be maybe I've invested in Samsung.
Yeah.
And I've seen some nice profits, right? I should remove some of that profits and maybe invest it in another company that's selling cheap.
Exactly.
Yeah, okay, cool. All right, so tip number 3 is to ensure you have a good entry point for your investment.
You want to break that down?
All right, so I would if I could, but I can't.
2,000 years later.
So tip number 3 is the entry point of your investment. Now, we'll break that down to you, right? You want to ensure that you're buying at the best price possible. Someone's going to ask, but Ian, how do you know you're going to buy at the best price possible? That's why you have a 52-week average. You have to look at the 52-week average, where it's been really high and where it's been really low. And if the price you're seeing today is closer to the lower end, and that's when you should be getting into that stock.
So point number 4 is dollar cost averaging. Let's take Tesla. So if you've got Tesla shares, you might have bought it at $800. Then a week after, you might have bought it for $750. A few weeks later or a month later, $770. What then happens is that an average price on which you bought your Tesla shares is now calculated. When they're calculating how much profits that you've made, you can see whether or not you need to bring your average down by buying more shares on the lower end. So if your average is too high, wait for the shares to drop so that you
before you buy again.
Exactly. Dollar cost averaging is one of the most tried and tested methods out there.
Point number 5 is to do your own research. Don't just rely on what your friends research. This is a very key one because a lot of people are buying stock just because someone told them to. Someone did the research for them. You have to understand that your needs and your requirements for entering the stock market is completely different from someone else's. Your goals are different from someone else's. Therefore, you need to be conducting things for yourself. You need to be conducting the research for yourself. You need to be finding out if this company is worth your money by yourself. Because again, your requirements are different from someone else's requirements. And you have to remember, not everyone is going to be as diligent as you are. Some people will do their research and leave out key bits. Some people don't even look at some companies' revenue. They don't look at some companies' profits. They just see, the company's doing this in the news, and that's it. They're going to go and invest. You understand? You know what's best for you, so you should do your own research and invest in the stock for yourself. When you're taking L's, you can't come and blame someone for your L's.
It's true.
You hold a hot slap.
It's
You
true.
understand?
And the money that they're putting into their portfolio, at the end of the day, could be spare change
Yeah,
for them.
it could be spare change
But
for them.
the
But then
money
you're
you're
there
putting in,
investing your
the
kids.
money you need to
Exactly.
pay the bills with.
Exactly. So you need to take it on yourself.
Yeah.
That's the key word. Cool. So can you give us the last point?
Yeah. So this is close to my heart.
Okay.
The stock market is not a lottery ticket.
Wow.
You're not gonna wake up and become a millionaire overnight.
I wish more people would understand this.
I'll break it down with a few points. The first thing is never place money into your account which you urgently need. It'll come back and bite you, especially if you need it urgently. That's the first thing. The second thing is companies fluctuate a lot. Like we've seen with AMC and GameStop, all it takes is regulators to come in and then that's it. The game has changed again. The next point I'd say is for you to get higher returns, very high returns, you need to be putting in a lot of money. Unless you're buying penny stocks or stocks that are really, really cheap. These are businesses. They're not toys.
Yeah.
They're actual businesses. So in order for their share price to go up, they need to be doing something in the business.
That's the rawness.
The CEOs are not just walking into the office saying, yeah, today we're going to turn the business into $1 million business today.
Yeah.
So, yeah.
They take time.
They take time. Yeah.
And so should you. So those are 6 key points to ensure that you do not fail when investing. We hope you've enjoyed the video. And if you can, please like and share. Definitely drop some comments and send a video to at least one person who you believe will benefit from this or want to get into investing. Until the next one.
Thank you.
Thank you.